in day trading, we always look at the term origin, or as I've dubbed it, original, because you always want to think of things as the original moment that happened to define the chart. So I've just kind of picked a random place on the charts to explain what that means. And today we're talking about origin theory, but that term origin theory really is just the shortcut English form of original theory. The original theory, or just like the original level, like this would have been a break level, and then when it gets hit, it turns into what could be an origin level if the move fails. Like that, at that point, if your trend fails here, you've got a trend like this. If this fails and it breaks its move, then it becomes an origin level. It's tested a second time, so it's met all criteria. It's tested multiple times, and it looks like it's breaking the move. So you would also have a backside right here, or a break level, which could also turn into an origin on the other side. So in day trading, what would you use? Would you use the backside level or the original break level? Well, in this valley here, something like this, you'd use the original level. So it's always about, and it's always really important to find original theory in your charts, right? Like the original theory of what's holding the move down, right? And you can see it right there. It hits trend perfectly because this is the break level. It creates a range trend. This was an origin level. This is going to polarize this part of the move, which is the entire range, as to where this is just kind of like, oh, hold level to hold level. So this is just kind of like a micro range, although it's not micro because we're on a daily time frame. This is quite a bit of time that's passed, but relative to the candles, these could be 1 minute candles for all we know. It doesn't matter. Time is all relative to how long it's happened. And you know, the first moment, whether it's a minute candle or an hourly candle or a daily candle, is still the first moment. So then you can see here, when looking at this chart, this can't have a massive breakout after breaking over this polarity, right? Like this, because this wouldn't be polarity of the move. This would simply just be your backside hold level on the higher time frame right here, which would have been even possibly a break level from here. Then ends up being a smaller time frame right here, and that's why that gets hit there pretty perfectly. But then that can't unpolarize the move, because it's actually the trend which is going to attack that break level, which can do that. So we always think of things in day trading as original theory. So that would have been like a perfect entry for a short, and like look at the results thereafter, right? Like you're, you know, what is this, plus 6,300% on 100x, and it's a perfect touch, right? Because again, it's just original theory dictates what is going to happen on the charts. So every time we look at something, we have to think of this in terms of original theory. So, you know, we could even go right now and see like what's going on with Bitcoin. Well, where's the original theory that decided what this move was going to do? Like, was it a break level here? Well, it kind of can't be, right? Because that's like, look, you've got a break level there and you've got a hard close above it. Okay, right there. Sorry, I misclicked the candle, but you still got a hard close above it. So it can't be this. Could it be this one here? Well, no, because you got a hard close there, so it can't really be that one. Could it be this one? Maybe. What else is happening? Well, you've also got a weekly test right there as well. So you've got a daily, a weekly, what about a monthly? And now we're moving up in time frame. So this is a little criminal. But if you take a look at this, actually you found your original theory. It's actually a monthly break level. So if in order for this thing to move up in the future, you have a monthly break level that has to get passed through here. And then you have something like this maybe for a trend, or, you know, you go down in time frames and find something else. But you notice how they're kind of two different candles here, because technically you would be here on the weekly and you'd say, oh, well, this one here should be it. But it's like, wait a second. No, that's not the original theory, because this is actually on a weekly candle prior to it. Had that daily been inside of here, then it would have been the weekly. But when you're here, you're actually 1 day away. So this must have been a Saturday. Yeah, Saturday, August 13th, you can see, and that's a Sunday. So that's where that split of the new week is. When Sunday ends, you've got a new week that starts here. So that splitting of that 1 day difference is going to actually change this whole move. So actually it wouldn't be that. It wouldn't be the weekly, it would be the daily, because it actually happens first. But then when we go to the monthly, and this is why we always start time frame down, we go to the monthly, we can see it's inside that same candle. So you actually have a monthly break level here, which is just giving you your kind of information that you need. So you may end up hitting this level here, monthly. What color can we use for monthly? Let's just do like kind of a cayenne color. That's perfect. Let's delete this one here. Oopsies. Delete those. And copy paste this one, and you've got maybe an inverse that will hold here, and then you can create a range trend off whatever touches this, and that will polarize the move, right? Like right now, maybe you could come back up and touch this, and then you hit some other ladder point. Maybe you reverse this. I'm not exactly sure. I don't even think you would reverse that, but at least at that point, you would have, you know, an interior range trend to break out of this part of the move. So this is all a part of origin theory, is about understanding like the logic flow of the charts and that what was the one thing that's controlling it all. Because you could go in here and you could start looking at any level and you can find hold levels that are respected. Like let's just mark this one, for example. Here's a hold level. I go, oh yeah, there's a nice little 4-hour bounce there. It's really good. But this doesn't mean it was the original theory being used. It was more likely a backside level that it broke out of polarity, and it's back testing polarity to see if it can hold polarity. So like what would be the right case here? The 4-hour hold level, or would it be, this hold level? And this one doesn't even get hit. It's completely untested. Or you could even go here and say, whoa, it was a reverse level. It's perfect. And yeah, it's okay for, an intermediate time. But what was the actual origin moment? Like the first thing that happened in time was actually this level right here. So if you were to take all of this information here and just numb it back to what was the first moment that happened on this chart that, unpolarize this, it goes above that. This back tests something in here to hold that. This is an untested backside valley that was never really tested. Like it did bounce here, but that's perfectly fine. It can. This was like the origin part of that range. So in this entire range, when you start boiling back, like what can happen here, combo levels, reverse levels, all this stuff like that, the original theory that broke this move out was that origin level, the once upon a time break level where it broke over. And this could actually even be a different time frame. This could be daily. This could be hourly. I just have it marked to the 4-hour candle here. But if we go in here further, you have to do your due diligence to find that. Like you've got an hourly rate here, and that's still broken, and that's fine. Maybe it's a 15-minute rate here. Let's go take a look. Let's put the replayer tool on here, save a few miles on the tires. 15-minute rate here. Was this it? Let's go back to the hourly. Just condenses it a bit for us. And that's it right there, right? 15-minute origin level. Broke up past that, and that's where your bounce is going to happen. It's going to kind of hold the move there. And then you can just combo it down to a deeper part of the chart. Like you can even combo it to right here. More likely that hourly that we had marked, which is kind of right here, right? Like this, wouldn't use that typically, but that's your origin basis of the move, right? So this is always really important to find that origin theory of the move. So if we were to just kind of delete this and start looking at this move to help us identify this range, what we could do? We could just start marking stuff like this, right? You start marking things like this right here to understand like, okay, there was some kind of possible break level right here that held the move up. This was going to be your trend here that would have broke to break that move down. And we can even go to the 4-hour here and see you've got your range trend right here. So oopsies. So that would have been the first one. So you would have started on your 4-hour. So starting on the daily wouldn't have been correct here. You actually don't have a daily wick down here. It's actually a 4-hour trend, right? So this is the origin trend that held the move up. This was the origin piece of that move too. So like once you start creating that architecture with trends, oopsies, you should get some pretty accurate results there. Like hit this trend, hold that, start to break this one, back test, move down, test that trend, move down, right? Like that was kind of the origin theory in that move. So then, looking at this chart, you're finding something back in this range here, right? Like you're finding something back in this range here that breaks the move down. And then it's kind of the same thing with the top side here. Like what would hold this top side down? Well, you have the monthly break level, which is fine. But what would it be beyond that? So that's kind of like an exterior moment because you've got the interior of this candle. So this is a rather large candle here, right? Like this one candle here is rather large. So this would encompass an exterior moment, and then the interior to that would start moving down in time frame. So what we would do is we would say like, look, we don't have anything inside of that interior candle. What we can do is we can mark the top of that candle as kind of like our guide. This is where the weekly starts, so it can't be anything before this, right? And that's where the daily starts. So you've got kind of a break level. So you could use this point on to find where that is. You could use exactly this candlestick fourth right here, and that's it. That's the only one you can use. Let me just take that back because all we're doing is we're working down in time frames, right? So then you've got your tests here. So the first thing I would do is, because we can use this moment forward, I would look for the origin theory in here that broke the move down, and I would try to match it on the bottom side, starting to talk about like Pandora's box and mirroring Pandora's box 2.0, which is something different completely. But I would start now working down in time frames. Like I would first draw this. This is a little too premature because it does look like there's a trend that happens here prior. So before marking this 4, I would work time frame down, but I would try to find, what starts from this moment. So what I would do is I'd go to this 4 And there was something like this here. This was kind of like the first trend that broke. So it's not really usable, right? Like you've got this to this, but that's not really usable. I think we can find something even better. Yeah, there's not going to be a lot of trend work in here. You don't really have a lot of trends. Like maybe we can go to the 15-minute, but beyond this 15-minute, I wouldn't really be using such a high time frame candle like the monthly all the way down to the 15. Like we just simply don't have it. So I actually wouldn't use trends in this move. What about break levels? Let's look for break levels. Okay, so you've got a break level here on the 4, which is also part of that monthly break level. So you've got like kind of a local break level here. So you've tested that. You don't really have anything there. This isn't an accumulation candle, so you can't really create any trends off of it. Your best case scenario is something like this on a lower time frame, but again, you still kind of move over top of that. So I wouldn't really use this either. And I wouldn't expect this trend to really do anything either, right? Like, yeah, and it doesn't. It just kind of it doesn't do anything. Maybe we have something on the hourly here, but again, I just don't think there's trends here. So now what I would do is I would just go through that same cycle again. Okay, so like what do we have for the daily? Well, we have a daily hold level here. So that's fine. That's one thing we have, and that's way back in the charts, not usable. We have a daily hold here. You have your daily hold level here. So that would be kind of a first good guide. So what I'd like to do is I'd like to mark this as a daily, and then I'm going to go down in time frame here and see if there's anything else that we miss. So you have a 4-hour here that is tested, right? So let's mark this as the 4. You have a 4-hour break, 4-hour hold. So that's tested there. Is this tested? It is tested. So you're starting to follow. So you can already see you're starting to follow a trail of hold levels, right? Like 4-hour hits there, falls down. Let's go to the next 4-hour. Whether it be the wick or the body, that's fine. I'm just looking for the origin theory that holds it down. This also holds it down here. So your next one would be this right here. You're starting to get into reverse territory. The next one would be this one right here, which, oh, hold on, let me go back here. So this here is actually tested right there. So this one now is tested there. So then you'd be out to here, which is tested, and then you'd be here. So you'd be here. So really what you're doing is you're kind of on this 4-hour trail. So what I would like to do is I would like to go back, start that process again to find the range trend that's going to be in this move. So you've got something like this one to this, which is fine. That's your very first range trend. So that will start to unpolarize or start to cycle the move, right? So you're really trying to find what the original level was here. Like that's the whole purpose of this. You have a daily here. When you've hit that daily, now what you could do in the future is you've hit this daily. This can be the trend. Once you come back up and test something in here, this can be the trend that unpolarizes this hold level, and this 4-hour trend can break that cycle to get to this, right? So you're starting to at least create what the original architecture of this chart looks like. You don't have this daily yet, but you will have a daily range trend upon breaking out of this trend right here. You're going to eventually break this trend, and then you're going to go up and test something in here, likely this 4-hour, and it's going to create this daily, this daily range trend, wherever that reach point is. Probably pretty far out here. Yeah, wherever that reach point is, at some point it's going to intersect with this yellow hold level. When you unpolarize the 4 hours, right? Like when you break this trend, it's going to hit this and it's going to create this as a daily. That would be one thing that could happen. But you see, that's like the original theory of what started this dump, is what you're looking for, right? So you're always looking for original theory in the charts. Same thing with anywhere on the charts. We can pick a random spot and we'll try to find, yeah, this looks good. Sure. What was like the original theory that held this chart up? Well, on the bottom side, it's very easy to see. It's a daily break hold level. So this will polarize the chart down, possibly even test this back at the top in the future, right? Like it's a possibility. It did test once. I think instead of doing that, we have to start from the weekly here. You've got this here, which was always that 29.2 level, which was, a famous level from the past. Like you've always got that there, tries to hold it here, bounces off. So that's one big point of polarity. Not really what we're looking for right now. I just would like to see the original theory of what's happening here, but nevertheless, we had to go to the higher time frame to see this. You've got trend like this. We can mark that as the weekly, although, come on. Mark that as a weekly. Although I would still like to look more interior. You've got weekly hold level here, which looks like it's kind of something from back in here. So you've got this here. So at least we have a basis of where to start. We've got a trend on the bottom, trend there. And then we just kind of want to find that original theory as to what was going to be breaking this move. Like you got a hold level here, or sorry, a break level here. You had that range trend that we had earlier in the replay from here to here. You've got that range trend, which we don't need to look at now, but that was that range trend. So we know that this is trend on the top because we already found that a little earlier. So you have trend on the top, right? And in that moment, it would have also been trend on the bottom side. So you have daily trend here, and you would have had daily trend like from here to here. Same thing pretty much. So this is exactly what I'd expect to control and polarize the moves, is kind of these two trends working against each other because they are the original theory of what held the move. You had this here, which created that hold level range trend off of the other information. Again, we already did that a little earlier. And then I would just assume it to just, try to hold this trend. And once it loses it and back tests it, like you've got a hold level here. So then, your classic situation trend, deep dive. If you can't get back over top of trend, the move dumps, or you back test trend. And if that can't get over it, just like you've back tested trend here, the move just straight dumps because this is the original theory that held the chart. So this is polarizing the whole thing. You back test the trend, and then I assume you just fall straight off a cliff, right? Exactly what you would expect. You have a trend, you deep dive it to some target like this, you lose trend, and that's it. That's your polarity of moves. So this is like all original theory. It's all about finding the controlling piece of what's happening in the charts, right? And then so you can see it when you start. Even if you find one side, like even if we found the top here, that already pointed the arrow to say, hey, this is our daily trend. I don't care about the weekly. Like originally I had this weekly marked. You notice I just immediately deleted it because you're not going to have a weekly trend down here, a daily here, and then it's like, oh, okay, just kidding, 2 different time frames. No, like I immediately deleted this even before marking this one because I saw like it's a daily trend here. You're going to match it with a daily trend on the bottom. Again, mirroring and Pandora's box 2.0 gives you like very, very quick and clear and concise information about what to look for. Let's look for another kind of spot where it would be origin theory. So I don't know, pick a spot. Yeah, this looks good. Start from the bottom here. So origin theory, like what would have been controlling this move, right? So let's just take that replayer tool. Let's just cut it right here before we can see anything. Start with a weekly. Yeah, so like you would mark this, but then you would say, hey, what happened here? Because this moment would have happened first, right? You have this origin on the bottom side. So you already know you have an origin on the bottom side on a quite a large time frame. Now, I do believe, if memory serves me correctly, there was a 4-hour here. I believe it was right here. Or was it this one here? There was this here, and there was that there. And it would have been this one here. Or was it the daily? God, it's been a long time since I've looked at this. So that's kind of your origin level right there, right? So that kind of gives you your trend here, and that's fine. You lose that, so you're outside of that range, and that's fine because that, at least that trend there gives you this architecture here, which just gives you your break of the move there, cycles here, starts the distribution, and then say la vie, Bitcoin's over. So at a minimum, at least it's giving you your kind of final moments here, right? Like actually it would be this one, lose that trend, back test it, so forth and so forth. So we do know we have a 4-hour there. So I would immediately start to look for the origin theory in here, and what we had marked as the weekly here, we can just start working down in time frames and say, okay, well, actually it was a daily here. So this happened first, so we can mark this as red. And because this is the 4-hour, it's kind of a little bit of cheating because we know well, it's not cheating because we would have known that, but for our example, it's a little bit of cheating because now we would be able to easily go and say, well, where's the origin 4-hour? Let's leave that daily. Let's mark this, make it as the 4-hour, and just compare it to that daily, right? You have the 4-hour here. You have one right here. You don't. So you can see like there is no origin 4 theory here, but there is right here. So then you would know that this allows you to create your kind of your range trend architecture and all that stuff. Actually, it would have been right here, would have been right there, and then it starts to cycle to here and then to here, right? And that cycle ends up breaking the move, and yeah, you would have had your origin theory right there, breaking out of your 4-hour to your 4-hour, right? So then you can see, go to a lower time frame here. I don't know how low we can go, but you can see that's exactly kind of what holds the move down here. You can see where it, immediately tries to regain that level and actually breaks it right here. It's at play, and you're off to the races here, right? And this would have been that controlling factor because now you can see where this trend, you start entering that cycle with this trend, And just like we talk about cycles, like you're going to have your, your 1, 2, 3, and then this is your 4 and your 5. And then, the move just breaks up and over and just completely shoots the other direction. Again, because finding this 4-hour allows you to find what polarizes that break level, which is the trend, right? It allows you to draw that range trend. And then it would have been, very similar on the bottom here to here, something like this, right? You have same thing, your 4-hour, come on, magnet tool. There we go. That's that one. That's that one. And it would have been the same thing, right? Like you have your trend, and then you have what polarizes it, right? And then you have your perfect trend buys and all that good important stuff that you have. So, origin theory is extremely important on the chart. So let's find one more example. What about like a back in the day example? What about back when Bitcoin was down here? Sure, why not? Take the replay tool. I don't know how much candles it's going to give me. Let's see. Can it give me the 4? Okay, I won't go anything deeper than the 4 here. So then you would start with your first time frame here. Well, there's nothing here. So the best we have is an inverse level right here. But let's see if there's anything else that would, polarize a move instead of that. Nothing here. But you do get the inverse here, and you do get that there. I don't believe that there's anything there. Is there? I got to zoom in. Nope, nothing there. Possible here. What about the 4-hour? So far we've got the daily here. We've got the weekly on the bottom. This, like this. What about in here? Hard close, can't be that. 4-hour right there. Yeah, that's perfect 4-hour. So now what we would do is when we have this test of it, again, you have your trend that once this thing breaks, you're going to be ripping up the move and breaking that polarity, right? Like if you just find that the correct origin theory, you'll find what polarizes the move. Because then you can just see this thing probably hits that 4-hour again, like it does, but it already had broken the trend, and then it just sinks, right? So you can find your perfect polarized moments. And then this will give you the, the next range trend to break the move. This will give you, this to this, which you can see right here, unpolarizes that as well. And that will start to break that range trend, right? Like that's then becoming the reversal of the move, because then all you're doing is you're just cycling against this. And once this breaks, it's kind of game over, right? Like you can see it there, holds the move down once again, but it helps you find polarity when you find origin theory. And then you see when you break over top of the cycled trend, you just start ripping up. And I think this is the point where Bitcoin never really comes back down. I think at this point it just kind of goes straight up, if memory serves me right here. Yeah, this is the point where it runs up to 60K. But you can see where that origin theory gave you all of those pieces. So finding that origin theory is critical, because it will allow you to understand what is happening in the move, the development of the move, and what can polarize or unpolarize it, right? Because you can see, like with your trend work here, it's perfect. It's, it would be hard to make a mistake here, especially when you can buy this breakout here, or even, above polarity here. And it's just like, oh, okay. And so that would also give you pieces to the bottom side of the chart, right? Like, if you were going to hold, like, for example, if you're going to keep moving down, this origin is going to continue to hold. So take yourself back to a time and place when you've only tested this once on the top, and where's your origin on the bottom, right? So like you've got your origin on the bottom. That's daily. Let's go to 4, because we've got 4 on the top. I want to go 4 on the bottom. That's broken. Can't be that. This is not, and it's tested. So once you, let's hit play here, go to the test of this level. Like you've got an origin on top and bottom. This origin holds its move. At that point, you would just be looking for this right here. I think that's the bigger time frame going to be distribution there. No, it's not. It's actually here. That's fine. We still want to use the 4, but I was just curious on that. So you would have this right here. Got to zoom in real far for this one. That right there, which is here. And then it would just cycle down, right? Oopsies. Would be here, and that breaks. Would be here, and that breaks. And then it would be here, right? So this will start to unpolarize that. This might take a while. We might need to, and you could even, further this with all the other trends here as well. Like you could you could further the work with the trends and you know, uncycle them and uncap them and things like that. But I think we need to go to a higher time frame here, because I don't think it's going to take a little too long here. And you can see where you hit this trend, try to hold it, lose a trend. And again, this is simply going to unpolarize this. Like, this isn't the target anymore because you've already hit this on the top side and you're invalidating this on the bottom. So all you have is your range trend that just completely uncaps your move. So once you lose this, you've already lost this polarity here. Like, there's no point in even buying this. If you hit it and bounce, you're in a Pandora's box scenario. But at this point, you wouldn't be buying this. You would be either shorting trend, longing trend, or just completely waiting to see if this can hold up the move. So here's another perfect example of where finding that origin theory will give you your polarized moments, right? See what else happens here. Yeah, you come right back up to your trends here and go right up to the origin part of the move. And that's the one of the most important things as an advanced trader that you can do to make sense of what is happening with your charts, is to find the origin theory, because that will take all of the different things you have. So you have hold levels, you have reverse levels, you have floating levels, you have range trends, you have cycle trends, you have Pandora's box, you have mirroring. There's so much. But if you find the origin theory, it funnels you into the one thing that actually matters, where you can see, hey, this is polarity, and you've got, you know, +1, -1, and there's just a ton of stuff, right? But if you find the origin theory, it funnels you into finding where polarity can exist, because you find the origin theory, and then you can actually start to use trends that make sense. You can actually start to mark out the trends that are going to exactly what we talked about today, which is unpolarized moves, uncapped moves, go and have certain parts of the charts. Like, another indication here would have been that you don't have any origin levels down here. You've actually just been laddering against an origin level. So with that said, you would look for the exact same thing too, right? Like, you would look at this and you'd say, okay, so you have some kind of backside that hit right here, something in between here, something in between here. Like, maybe we just go to the 4-hour chart and do our best to find levels without worrying about too many time frames, because we may lose a replayer here. So you've got this here. So you've got the 4-hour, uncap the move. So now you'd be in a scenario where you don't actually have an origin level being hit on the bottom. Maybe you have this one here, but you have bigger time frame trends before you do that origin level. So then you would just be laddering the move. So you would simply just be following a trail of ladders at this point. It's not like this move up top where you had a break level, you tested it, you created the trend interior, right? Like in this moment, before any of the other development would have happened, you have the trend interior like this, which, you know, holds the move down because you had the break in the, you know, that's not in play down here, because you simply didn't backtest this to get that, right? The best you have is this here, which can give you maybe this trend like this, but that would be pretty obtuse. I wouldn't use that. I would just rather see the chain of the ladders happening. Like, at that point, there is no origin test, so I wouldn't be looking for origin levels. I would simply be looking at trends, and, you know, even this would be a little too aggressive because it's simply just not a distribution candle. You wouldn't have a lot of trend work here. Rather, you'd have laddering with interior trends like this. Like, you'd have a ladder here with an interior trend like this. You'd have the same thing happen here, right? More aggressive trend, and you'd fray out your ladder points. And again, you'd have backside there. So you see, you're using a combination of backside, front side here to just kind of continuously support up the move. This one here looks like it would be polarized from this point, perhaps. Is that the wick? Yeah, that's the wick. I don't really like that because it's not really a break level, because it just hit once and broke over top of it. So I would rather see something in and around here as the level, something here. I'm not going to change time frames, but I would say that this looks like it'll be probably maybe an hourly, and I want to say even maybe it's even right here, whatever this one tests here. So maybe this is like a good buy spot for the future. I'm not sure if it goes back down to that level. I have a feeling it doesn't, but you know, we can hit play and just see. But, you know, maybe it does. Just doing quick analysis here, that would be, you know, pretty decent spot. But I don't think it actually ends up going back down there. No, it just looks like it just hit something in here. Possibly something like this, where this was the origin level. Yeah, that's an origin level. It does reject there, goes over, holds it, goes above it, hold the next hold level, hold this next hold level. Yeah, it never comes back down to these levels down here. But again, you wouldn't like, origin theory here would dictate that you wouldn't use trends on the bottom side to justify, you know, uncapping polarity. You're simply just laddering up the move. Like you simply laddered up every step here because you didn't have that retest down here and all that, you know, ugly muddy work that you had up here, right? So again, finding that origin theory kind of gives you a guiding light. So yeah, origin theory is a pretty important one.